Hey, my name's James Nicholson and welcome to my channel. Lending is down 40%. You heard that right, 40% over the last year, which is absolutely insane. What does that mean? We're also going to cover what the percentage of people that are in mortgage arrears, that's going up sharply as well. And lots more in this video. You really want to make sure you hear everything that I've got to tell you in this, because some of this is really scary stuff. Now, while you're here, before we jump into this, as always, make sure you subscribe to the channel and hit the bell notification. Do that right now. That really helps us grow the channel. And smash the like button or tickle the like button. Just do something to the like button. Some of you get really annoyed when I ask that. There's always so many comments. Why do you ask? Well, it really helps us with the YouTube algorithm. That's why. If we want to get more views on the channel, you guys have got to do your bit by smashing that like button. So do it now. Come on, it's Christmas. So, what is going on? Well, obviously, we've had a very difficult time in the housing sector over the last year. In fact, when the pandemic started, I remember myself thinking, this is horrendous. We're locked down, businesses are shut. The market must crash during this time. It just made logical sense that that would happen. But the opposite happened. And those couple of years that we were going through that, the market absolutely went on a tear. And in that time, I decided that it really got me thinking on what was going on in the world and how I'd like to leave more of a legacy for my two daughters. I've got both my girls' birthdays are this weekend, actually. We've got Georgia 23 on Saturday and Emily is free on Monday. Very lucky that they're not got the same birthday. Otherwise, we would have been in trouble with Georgia for sure. But what I was thinking about during that time was, I want to leave these girls a legacy. And I've got buy-to-let portfolio already. It's in the personal names, most of it. So I wanted to build some stuff with Georgia and Emily. And so we started looking for houses. And we were looking at auctions. And the prices in the auctions were going for more than if we just went to an estate agent on Rightmove, because people had a lot of cash. They were getting bounce back loans, they were getting furlough, they weren't going on holiday, they weren't going to restaurants or the pub. So we were, as a country, wealthier during that time. And so that drove house prices up. Now, more recently, we've had inflation caused by everything that's happened during that time. And that's meant that interest rates went up 14 times in a row, from 0.1% to 5.25 at the Bank of England. And that meant that lending got really expensive. And so the market in 2023 just flatlined. There's not many transactions happening at the moment. It's around 15% down currently, which is a lot. That's a very big difference. Imagine if you're a solicitor or an estate agent and you've lost that huge chunk of business at the moment. And a lot of people have got that wait and see approach. And that's why lending is down significantly. It's actually down 41.4%, which is a huge drop. That is a huge drop in a year. Now, some of that is because of affordability, meaning people just know they can't afford the mortgage, and so they're just not getting a new mortgage. But some people have just got that wait and see approach. There are people that could afford a mortgage. They want the market to do something. They want the house prices to go down, and they don't want to feel that they're buying at the top of the market. Nobody does, right? And so that means a lot of people are sitting on the sidelines. And that's one reason why lenders are getting more competitive now. A year ago, this time last year, if you were looking for an interest rate, you would have struggled to get one less than 6.5% after the mini budget. It was very tough to get a good interest rate because banks were scared about what's going to happen. Now lending's dropped so much, you can get rates at 4.5%, sometimes lower if you take a big fee, because they're fighting to get our business, because this transaction volume is significantly down. Remember, a lot of money made by banks is the fees when they actually get you to do the mortgage. So that's a big problem for them. And this has happened this is the data from the third quarter this year. Now, the amount of money that we owe, outstanding mortgages, is down as well. So what does that show us? Well, that shows us that people, they're not borrowing more. is down 0.8%. They're paying down their debt. Where people can, people are overpaying their mortgages, or maybe they're downsizing and they're using that cash maybe that they've saved up to pay down the mortgage because they don't want that higher interest rate. Or some people will be in a position when they need to refinance that the deal doesn't stack up anymore, so they might have to top up their deposit and reduce the amount that they borrowed. So that's interesting to see because normally that number's going up quite quickly. So people are paying down debt. Now, arrears, this is interesting because this shows us what's going on in the market at the moment. Now, if you read the headlines, which we all do, the headlines are saying that just this quarter, arrears have gone up by 11.4% in the quarter. Sounds a lot. It is a lot. And that means a lot of people are struggling there. Now, they are 44% up, arrears, on last year. So 44% up on arrears. But what actually are the arrears? How much arrears have we got at the moment? So people that are in arrears, the real number, last year it was 1.02%. And now is 1.14%. So it's still quite low. It's around 1% of people. And that's the highest it's been, not since 2007 or 2008. That's when we got in really bad trouble. It's actually the highest since 2017. You wouldn't have been hearing or talking or concerned about the property market in 2017. It wasn't something that we were really focused on and discussing at that time. Now, why is this? Well, one thing is that the 2007 and 2008 crash, I had mortgages then, and they would just throw money at you. I remember going to mortgage brokers and the checks that they did were nothing. They didn't really check your income back then. You could do a self-cert mortgage. We weren't stress tested that we could pay at higher rates. Then everything collapsed. The financial crisis hit. And so the banks had lots of reform, and then they had to make sure that we could afford our mortgages. Now, we've had a really hard year. We've had high inflation. That's hit particularly low income people. And we've also had our interest rates go up, and so people are on a higher mortgage. But we were stress tested for exactly this. We were stress tested for 5-6% rates. And that's why more people are affording their properties than we might have expected. So what people are doing is just sitting in their property. And so there's less transaction. There's not lots of distressed sellers at the moment. There's more coming into the market, of course. 11% more people are struggling and in arrears than last month. But it's not happening as quickly as some people might see. Now, the good news on the horizon is the Bank of England's paused interest rate rises yet again this month. Banks, the lending's down with them. The swap rates are down, meaning they're going to get the money cheaper themselves. They're starting to pass that on. We've already had some big lenders dropping interest rates over the last few days as well. And so this market is going to get better. And so next year, house prices will go down. How much? Nobody knows. But it is interesting to see that this is potentially good news for us as borrowers, because if the banks were absolutely smashing it, they wouldn't have an incentive to fight for our business. Now they're not getting so much business. They're going to be fighting over getting you as a customer. Let me know your thoughts on this. The arrears, the lending, where do you think rates are going to go? Let's have a conversation about it below. Do smash the like button. Do subscribe if you didn't already. And go and check out this video right here.